Hello. Welcome to my channel, my dear friends. My name is Avilash. I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, this video is going to be very short because there's nothing much to discuss on Euro Dollar right now. Market is extremely bullish. So let's look at the chart of DXY first. As we all know, after NFP and CPI, DXY started falling. The last support was around 100.80, and right now market is trading below 100 level as expected. Yesterday we discussed about possibility of DXY hitting double digit, and we can see that DXY is trading on double digit right now. So things are seriously very critical for DXY, and we can see that on the daily chart also the fall is continuing. And if we zoom out the chart, you can clearly see that there is no support on the chart as of now. In case DXY tries to recover also, because of heavy selling pressure, each and every resistance will work, because this is a seller's market, and as a result, whether a resistance is minor, major, doesn't matter, everything will fall nicely. And the strongest resistance, in case of a recovery, the strongest resistance on DXY will be around 100.80, which was the previous resistance. I don't think so DXY have the strength right now to hit the 100.80 mark right now. So let's wait and watch. Now let's look at the chart of Euro Dollar. So this is Euro USD, and right now standing at 1.1241, and there is no doubt that this market is extremely bullish. As discussed yesterday, that there is no resistance on the chart of Euro USD right now. If you're holding a buy position by accident, then it is better to exit. Or you can wait for the market to retrace. Once you'll see that market has come for a retracement, exit, because if the fall on dollar continues, then obviously Euro USD will be going higher. In that case, there's a high chance that you will be losing your capital. As I always say, my dear friends, fundamentals and technicals, okay, these are two things in the market, and whenever fundamentals dominate the market, the technicals usually fail. As a trader, and especially as a retail trader, it is very important for us to know when to trust the technicals and when to trust the fundamentals. And right now, this market is a news-driven market dominated by fundamentals. As a result, following the trend is the only survival strategy. Okay. So my dear friends, on the chart of Euro USD, if you have a buy position, be on the trade, no need to exit. Simply use a moving average like 50 moving average and be on the trade as long as market is trading above it, because it's a trending market. This is not a day traders market. Okay, you simply enter in this type of market and be on it as long as market is continuing the trend. Instead of moving average, you can also use an indicator like super trend. Okay, so this is the strategy. And in case if you have missed entry on Euro Dollar, then obviously buy and retracement is the only trading strategy you should follow. As you can clearly see that no support level is working, resistance, forget about it. Okay, so in this case, I'm using a special 20 moving average here. 20 MA is a faster moving average because 50 is far away. I cannot expect Euro USD to come down to 50 moving average and take support and bounce. That will not work. So in this case, if market comes to 20 moving average and bounces, then also we can look for a buy position considering the bullishness. Again, I'll say, if you have a buy position, be on the trade. Do not think about exiting. Use a 50 moving average or super trend, and as long as market is trading above these indicators, be on the trade. But if you're looking for resistance to take a sell position, then you are in the wrong track, my dear friend. As long as there's any trend reversal news, you should not be doing that. But if you have missed entry on Euro USD, then use a faster moving average like 20 moving average. Once you'll see the market has hit the support level and bounce back, you can go look for a buy. 50, 100, 200 are the best moving averages on Forex market because of the stability. They work as a bundle, but in this case they are not working because market is extremely bullish. As a result, we are using a faster moving average. If you have any other choice, if you have any other faster moving average, anything like that, you can use that as well. Okay, but yes, follow proper risk management also. Do not gamble with it. And moreover, we also have a news coming up today. Michigan consumer sentiment. This is not a big event, so as a result, I'm not expecting any craziness or trend reversal kind of a thing. There may be some volatility for a candle, one or two candles, max to max. So, anyways, still be careful. Okay, so that's all from my side, my dear friends. Nothing much to discuss. As I always say, wait for the right time. Be a trader, not a gambler. And this is my analysis. I can be wrong as well. So if I have missed anything, please write down in the comment section. I would love to learn from you. Do not gamble. Follow proper risk management. Bye bye. Take care.